Here is the number that matters today. Around $3 billion in leveraged bets against Bitcoin were wiped out in a single move, because Bitcoin has broken out of a 6-week trading range and is now trading above $71,000. That is the sharpest range breakout since the market stalled earlier this summer. The trigger is not just technical. Last week, U.S. Bitcoin exchange-traded funds pulled in nearly $1 billion, and this week the Senate is expected to vote on the Clarity Act, a bill that would draw a clearer line between which regulator oversees different crypto activities. So the market is asking a simple question: has all that optimism already been baked into the price, or is this the start of a second leg higher? Behind today's move is a regulatory story months in the making. The Clarity Act was previously delayed before July 4th, and a compromise version later sparked a crypto stock rally in May, when Bitcoin briefly touched $80,000. Now the Senate has only a short legislative window left in this session, and the White House is pushing hard. Erald Ghoos, the CEO of OKX Europe, says American crypto rules could blow new life into the market. The key point is that investors have been waiting for a simple legal test: is a crypto asset a security, a commodity, or something else? Without that, large institutions stay cautious. With it, banks, brokers and asset managers can operate without fear of being sued by two different regulators at once. That is the change traders are trying to price today. Right now, the impact is visible across the market. When Bitcoin broke the range, traders who had bet on a fall were forced to buy back their positions. That is what a $3 billion short squeeze means. The selling pressure did not just vanish, it reversed into buying pressure. Crypto-linked stocks such as Strategy and Coinbase are rallying too, because their revenue is directly tied to trading volumes and Bitcoin's price. At the same time, money is rotating out of artificial intelligence names and back into digital assets. The deeper signal is this: markets are no longer treating Bitcoin as a fringe risk trade. They are treating it as a regulated macro asset, and that changes how pension funds, wealth managers, and retail investors allocate to it. Looking ahead, the Senate vote is the obvious catalyst. If the Clarity Act passes, the short-term reaction could be counterintuitive. Several analysts are already warning that the approval is likely priced in, and history shows that regulatory wins can trigger a buy the rumor, sell the news pullback. The more important level to watch is $72,000. If Bitcoin holds above that on a daily close, the breakout has technical confirmation. If it fails, the range could reassert itself quickly. Beyond the vote, the real test is whether ETF inflows continue at the same pace, and whether institutional money treats Clarity as a one-off headline or a fundamental reason to increase Bitcoin allocations over the next quarter. Here is the takeaway. The debate over whether the Clarity Act is already priced in is really a debate about time horizon. For short-term traders, yes, the easy money may already have been made. For long-term investors, the larger question is whether clear U.S. rules finally unlock the trillions of dollars sitting on the sidelines. That cannot be priced in over a week. Watch the Senate vote, but do not confuse a single headline with the structural shift. If clarity arrives, the next 6 months will be driven by allocation, not speculation.